Well, as we come to the end of our trading week here in a few minutes, I want to welcome aboard Brian Hoops, and he is the president of a company called Midwest Market Solutions. He hails from Springfield, Missouri, and he joins us right now. All right, Brian, I want to get your take on this choppy action we're seeing here in the grain markets today. We have corn going one way, soybeans going the other way, the wheat kind of caught in the middle. What does it all mean? Because we have a relatively big report coming up on Monday.
Yeah, we sure do, Marlon. You know, we're digesting these rains that have been moving through portions of the Midwest. A lot of clients across Iowa telling us they have had real good rains. Illinois, Indiana, all receiving real beneficial rains, and it occurs at just a perfect time frame right before the crop is either pollinating or just going to pollinate. And so we also have a little bit cooler temperatures. It's just really ideal for some of these areas. But of course, clients in Nebraska, in the Dakotas, Minnesota, some of the western states really suffering from drought-like conditions. And as you know, we noted last week when we had the big acreage and stocks report, 1.2 million of the 1.5 million acreage increase in corn was in the Dakotas and in Minnesota. So some of this is a lot of these new acres are getting missed by the rains. But we go into the weekend here, we're seeing some strength in the soybeans. Demand is starting to pick up. We had soybean meal sale, soybean sale this morning. And, just with this increased demand and longer term forecast still in doubt, soybeans have a reason to kind of hold together from a technical standpoint and even to put in a little bit of premium ahead of the report on Monday.
Yeah, Mexico has kind of saved the day this week, coming in a couple different days to buy soybeans and soy products. So hats off to them. Thanks for the business. Let's take a look at our current futures here, Brian, and I'll explain what I'm talking about here. With the corn, we have the corn on the downside today. We have September dropping 9 cents. We're at 5.27 3/4. But you have December down 8.5 cents at 5.15 1/4, right in the middle of our trading range today. So it's lower on the day, but it's just not really sure if it wants to push the upper end or the lower end. Meanwhile, on the soybeans, they have been firming up during the day, and we have August now at 13.76. That would be up 10 3/4 cents on the day, but it's still about 4 or 5 cents off of our high from earlier. And November new crop soybeans are up 6.5 at 13.26. I would imagine, Brian, this alludes to the fact that you were talking about the weather forecasts are still going to turn warmer and drier, I understand, on the more extended forecast. And that's when you start getting into that critical time frame for the soybeans in the Dakotas especially.
Yeah, exactly. Corn is going through pollination here in the next couple of weeks in a lot of areas, but the soybeans are just starting to bloom. We'll be setting pods, and then you start talking about reproductive season for the soybean in the month of August. And those forecasts could be a much hotter, drier scenario than what we're seeing this week and next week across most of the corn belt. So there's a good reason for soybeans to keep some premium in there. In fact, canola futures, which mainly are traded in Canada, are limit up here at this time frame, and that's spilling over into our bean oil futures, and we've seen some strength as a result. So we're that's kind of spilling over to soybeans as well. But that hot, dry conditions, the drought-like conditions, are certainly affecting a lot of our markets.
Okay, and in the wheat market in Chicago, you have September now 2.5 cents lower at 6.15 1/2. It looks like we continue to have spread trading there. Kansas City, September, now 5 higher at 5.93, so just pulling in opposite directions here. And spring wheat, well, Minneapolis now firming up again. We're 5 3/4 higher at 8.10 3/4 after dipping below $8 earlier in the day. We'll come back and talk more with Brian Hoops. We'll take a look at our livestock trade heading toward the weekend coming up next. To the livestock we go, and let's take a look at live cattle futures with a little commentary from Brian Hoops of Midwest Market Solutions. Interesting, choppy trade in the live cattle. There again, kind of indecisive market action here today, Brian. We have August live cattle 2 cents lower. We're at 119.25, and there again, it's just about in the middle of our trading range today. The trading range has been about $1 wide. And so there it sits. We have the October contract 1 tick higher at 125.50. Ooh, 2 ticks higher now at 125.50. That's exciting. December through April, though, is over 40 cents higher. Now, on the feeder cattle market at this point, you have August now 90 cents higher at 158.22. They're finally reacting, the way it seems, to that sharply lower corn market today. And on the lean hogs, right now you have the August contract $1.50 higher at 101.87. It took a while to get that one going. Right now we're within a dime of our high of the day. So Brian, what's your take on the way things are acting heading toward the close?
Pretty decent performance, both the cattle and the hogs going into a Friday's close here. The export sales that were out this morning, I thought were decent for both beef and for pork. And we're reacting to that as, we're very heavily dependent upon how much of this product we can export at this time. Feeder cattle certainly going to be taking its cues from the corn market, and I'm a little surprised they didn't react sooner. But going back up near their old highs seems to be where they want to go towards. And if they get back up there, they're probably going to exceed it and post some new highs. But again, these could be looked at some hedging opportunities in the feeder cattle market. Live cattle, I think, especially the deferred contracts, the December, February, the April contracts, those back months should find a lot of value as supplies tighten up considerably as we go into the third, fourth quarters of this year.
Are you encouraging producers to lock in feed needs at this big drop in the corn market right now, thinking that that would be kind of a golden opportunity, or do you think they will get better chances?
Yeah, I think if you haven't locked in your feed cost at this time, you really need to do something on a short-term basis from now through harvest. Make sure that feed cost have been locked in. We've dropped from well over the $6 mark in December corn, now hovering just above $5. So it's an opportunity, especially if you're going to use some sort of an option play to get yourself into that harvest time frame where you can evaluate the size of this crop. And the prospects are that we will have a crop that probably wants to move higher because we do have very strong demand, and smaller Brazilian supplies are going to mandate that the U.S. has better exports this new marketing year.
Well, very good. Thank you for the information, Brian. Have a great weekend out there. Brian Hoops of Midwest Market Solutions. Tammy, back to you.